This one comes from Gary. He says, Beau, what's the best way to shop and make sure I'm getting the most favorable terms for my business acquisition financing? I'm purchasing a tire store, non-franchised. No real estate, just the business.
Got it. Okay. Gary, acquisition of a business, no real estate. So if we're looking at SBA financing, it's going to be an SBA 7A is the type of financing. So on that, what we're going to look at is there a fixed rate option. Most of the lenders are going to offer a variable rate. And so those are all linked to Wall Street Journal Prime plus a margin. So your margin can range anywhere from, at the low end, typically 1.75. And granted, banks have all different flexibility. So margins 1.75, the maximum based on the loan amount, margin could be 2.75, okay, on an SBA. So if you take Wall Street Journal Prime plus your margin of a max of 2.75, that's the maximum. So the margin is what we're going to negotiate. That's one point. The other thing we're going to negotiate is we're going to negotiate on leverage, right? Some banks might come back and say, hey, we know it's going to be a 10-year term. Some banks might come back and say, hey, listen, we're only willing to do 80% of total project costs. Some banks say we're willing to do 90% of total project costs, right? So how much equity is needed? The other thing is collateral shortfall. You might have 2 or 3 rental properties. One bank might want to put liens on 2 or 3 of those rental properties versus one of the banks says, oh, that's enough collateral in your primary. We're just going to put a lien on that. So those are negotiation points, right? And the other thing I would say is what we look at is some banks might be more liberal with how much working capital and what the total project cost would be, how much funds are going to give you, not just part of the acquisition, but all the soft costs that go along with it, some working capital, the employee salaries for the next couple of months, some equipment. So you might get more proceeds. So at the end of the day, it's not always about the cheapest margin. I would say it's like the total, like how much equity, how much collateral do they want from me? That's where we would look. So because sometimes it's better to pay a little bit higher rate if you're getting 90% financing versus 80% financing. You could leave that extra money, invest in somewhere else, that kind of thing. So that's all the things I would look at. Now, how do we go about it? If you just go to one bank, the problem is you're going to just get their answer and they're going to say, oh, well, you need to come in with 20% of total project cost, not 10. So an advantage would be is to work with a commercial mortgage advisor like myself, whether it be me or somebody else that specializes in SBA financing, because we have a network of bankers, both bank and credit union and non-bank SBA lenders, whether they're PLPs, which means they're a direct lender, and they can authorize and sign on the dotted line without having to get an SBA approval. So what we do, the majority of us at least, I can't speak for everybody, is that we help you package, we go out and we take it to our bank partners and we find the best deal for you, okay? The best thing is that these banks want middlemen, they want the commercial mortgage advisor because we bring them business, right? So we don't charge you, at least I'm speaking for myself, is that I get a referral fee from the bank upon a successful closing. So at the end of the day, all I try to do is provide value. And if I'm able to do that and we close, we're going to take it and we're going to make sure you get the best possible deal, because we're not just going to one bank. And it doesn't mean we're submitting the loan to all these banks. We just have high-level conversations and give them the factors. Hey, what would this look like on this deal? And certain banks don't like business acquisition, like meaning they only want to do business acquisition if there's real estate involved. Some SBA lenders are just real estate related SBA lenders. So in a nutshell, commercial mortgage advisor will help you shop multiple banks, get you the best deal, and whether it's pricing, total leverage, and ease of transaction is why you'd want to work with a commercial mortgage advisor. So at the end of the day, at no cost, you can book a call below. We can talk, I can tell you the process a little bit more in detail, and we can see if it's a good fit. Thanks for the question. If anybody out there is watching this, if you have any questions in regards to investor financing for businesses or real estate, that's what we talk about on the show. You can go to investorfinancing.com/ask and ask your question. Thanks so much, everybody, for asking great questions this evening, and we'll see you on the next episode. Hi, if you'd like to book a call with me and discuss SBA financing, whether it's a 7A or 504, or you just don't know where to start, maybe it's a startup business, you're buying an existing business, you're buying a franchise, you're building a new office building, you want to expand your existing business, we have multiple solutions. I can walk you through the 7A and the 504 and the SBA loan process. And if you have any other questions on any other types of financing, I'm happy to book a call with you. The link's below. Look forward to seeing you soon. Hey guys, Beau here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.